Hello and welcome back to the Crypto Chronicle Podcast. We have a bit of a different podcast this week because we have our young, thriving founder, William, back on the podcast. William, how are we?
I'm well. I've handed over the master seat to you. I used to be the one introducing.
Yeah, you did actually. Yeah, back in the day for those watchers that used to watch our kind of mining store podcast, I guess like 2 years ago, we used to have Tony and a few others. We had the Google Meet going, didn't we?
Yeah, it was good.
A bit different production to these days, but given that Will is back on the podcast, I thought we do something a bit different today rather than just pump straight into the fundamental news and the meat of what's happening in our industry. We'd actually have a quick discussion and recap some of the services and offerings we have, and Will can actually go over some of the up-and-coming developments which are being released. So I think the best way to do this is go over kind of mining store and Imperial Wealth's philosophy. I think when people come to us, obviously they might come interested in the mining services or just our philosophy or how we trade. So yeah, let's recap our philosophy. How do we?
Yeah, no, it's a good thing to recap, and we've made some changes recently, which we kind of went back to the drawing board, didn't we, and said, you know, what are we trying to achieve here? Mm-hmm. What do we want for our clients, which is the most important part of the business?
Yeah.
And really it came down to, well, the first thing we believe in is educating people before they invest into the market. So many people get burnt by their mate telling them something at the pub about a meme coin, which may make money, but also may lose them a lot of money if they don't understand how it all works. So really providing both a suite of free education through our knowledge center, through our YouTube channel, but then of course, if people are serious and wanting to take it to the next level, providing that paid education. And we'll talk about in a second, what the different levels of those courses are. Mm-hmm. Second thing, obviously, was when we recapped and we looked at our services, what is so important to us is providing that high level of education, B, a lot of research and analytics. Mm-hmm. We don't believe in just giving signals of, buy this and not really teaching people why or giving them a breakdown why. It's important to us that we give that high level education and analytics to them. And that's coupled by obviously full-time analyst on the trading side, Mitch. On the DeFi side, we've hired a full-time analyst, Hish. Mm-hmm. And then the final element is obviously that community and support. Making sure that it's not just, here's a course and here's some tips and good luck and see how you go. It's, here's the research, here's the education. Plus, if you have any questions, reach out to the community, ask, I'm looking to do this play. Is it the right time? All those things.
Yeah. And so just kind of to conclude on that and touch on it, it's really kind of that holistic approach, isn't it, with most of our clients, where we don't want to get someone and just kind of angle them towards one offering that we have. It's not, you just, here's your miner, here's your 10 miners, here's your passive income, that's it. We're trying to get that holistic approach, aren't we, of getting, what's a portfolio? Okay, you've got these coins. What can we do with these coins that just sit there?
Exactly.
Can you swing trade? Can you yield farm with Hish? Can you do X, Y, and Z? And so I guess for those listening out there that are wondering, and you've been in this community a while and you're thinking, maybe I should do this. Who are some people? We have people like Bobby, don't we? And Craig that probably just started out on mining, didn't they?
Yeah, a lot of them, like Craig definitely started out on mining way back. I think it was 2019. Bought a couple of miners, originally hosted it himself, then, caught on that we had hosting facilities, wanted more passive, started using that. We obviously released our trading side of the business and he jumped on it straight away because he loved the experience he's had with his miners. Now he's on mining. He's got the trading long-term through the Trading Academy, the altcoin portfolio, plus follows your advanced trading course.
Yeah, he does,
and, now does the swing trades.
Yeah, well, you can DeFi. Even see if you go in the TA chat today, all of the Trading Academy members that listen, Craig was posting a win today on one of the Sol swing trades he did alongside me.
How good's that to see, by the way? Sometimes we don't get every trade ourselves.
No.
And it's so good to see what we've taught clients that they're grabbing the opportunity even if we're not.
And I think that adds to the holistic approach of what we do is that, like we said before, the worst way to approach cryptocurrency or even yourself approaching the industry is just to get signals from someone and you just follow the trade and you buy and sell. Whilst there are some people in the Trading Academy that may do that, this approach we try and take with people is that it's best to teach yourself how to invest and how to trade. It's why we have the courses in place that we do. It's not just buy Bitcoin, buy ETH and this select few alts and off you go. It's teaching them to understand the different cyclical natures of the cycles and, here's some support, here's resistance, and how you can trade yourself. And someone like Craig, or, I think we have brought Bobby up on this podcast a few times. I often bring Bobby up as an example to even just my clients that come to the advanced trading course, and showing them that, like, Bobby literally had no idea, and I take the piss out of him sometimes, saying he didn't know the difference between a red and green candle, and that's because he didn't. And maybe even Craig didn't back in the day. He probably did, Craig, but and it's showing that these clients are in positions worse off than probably some people that are listening are currently, and they've been able to get together, take the courses, get involved in the community. That's something those two do a lot. I see Bobby's almost the first person to talk in the DeFi chat every time an airdrop
100%.
drops.
Even personally, like, if I look back at 2016, probably when I first started really trading, and making some wins and doing well, and thinking I knew how to trade. Through my journey now to where we are with our business, and the day trading course or advanced trading course that you've put together, how much more I understand the markets. Everyone has something to learn.
Exactly.
And we're constantly updating those courses as well for things that we're learning. But it's so much better to have that structure, have that humility to go, no, I'm not an expert. There's people who are doing this stuff for 30 years. There's so much I can learn, and getting into it. For sure.
So I don't think we'll go down a full breakdown of the products and services. I think most people listening probably do know about that. I think if you want any very specific, clear idea, please reach out to me or Taylor. Taylor more specifically about mining, but obviously he can take care of you with the services as well. But if any of you ever have any specific questions on the differences between the services, or what's the difference between this course and this course, or what do I get if I join the day trading course as opposed to joining the trading academy, I can break that down into very clear detail for you, given that I actually am the full-time analyst that runs those services. And I will quickly go over what the new features are, which we mentioned last week, to the trading academy soon. But moving on, let's get into what is actually happening in this market. Of course, being the great inaugural ETF podcast from last June, we will go over some ETF news, even though there is barely any. But what's happening right now is obviously on a lot of ETFs, and assumably most traders and investors here know what options are. But for those who don't, an option is something that grants you essentially the right to buy or sell something at a certain strike price in the future, or at a set date. And what legislators want is they want people to be able to trade options on Bitcoin ETF spot ETFs. Sorry. And I think what's essentially happening is, once again, there's discrimination here where you can do it on futures, but not on the spot ETFs. Essentially, they're just saying, what are you doing, SEC? And it's one of those things where Gary needs to approve, but he won't. But I think it's really good, because it's one of those things that's really big in institutional trading and traditional finance options trading. So once again, if we can get options, it's just another avenue, the way I see it.
It's like the longing and shorting of the retail market.
Exactly.
But obviously way. Institutions prefer to do it in that way. It's how it started out. So it's weird the path that we've gone through. Bitcoin ETF is approved before something like this. There was a non-spot ETF before that.
The futures one, which is what I'm talking about, because I guess the easiest way to put it, and I've actually have a few play fights with Simon from CoinStash over this, because he's a big options man, whereas I'm a big perps man. We were arguing about which is better for risk, and I was arguing, because options, you're not stuck in an option, but as I said, it goes to a specified date. A perp, you're in and out whenever you want. You can get stopped out, but an option you can never be stopped out on, essentially, is what he was saying. But just to summarize, I feel like perps like the new age thing from millenniums, a bit younger, more risky.
That's kind of what I'm getting at. Surely they can achieve the same thing without this different type of product.
Which does make it weird,
I mean, I suppose it's one of those things. It's like, if you start riding a BMX before you go into a skateboard, you're always going to say BMX is better. But anyway, interesting that some things are out there and other things aren't yet.
Yeah, so hopefully they can pick back on that, and we get that approved soon. But the last thing I will say on ETFs is actually something that's quite positive and involve positive inflows. Now, obviously, for those that have been following the ETF and us on the ETF podcast, is what's essentially been the greatest selling pressure on Bitcoin since the ETFs got approved is Grayscale. And the reason why Grayscale has had the most sell pressure is not only were a lot of these people in profit from the premium that was on this fund that turned into an ETF, that a lot of people took profits on, but they have a 1.5% management fee, which is renowned to be pretty high. Most other spot ETFs and their companies are doing percentage below 1%. So what's happening is a lot of people have had to dump their Grayscale shares and that ETF and then buy into another one, which, you know, to people out there, they go, oh, it's 1.5. When these people are holding hundreds of millions of dollars of a share,
it makes up.
Yeah, 1% of $100 million or $50 million or even $1 million is a lot of money. So they're going to change and they're going to do this. So essentially, I think it's been about $17.5 billion in sell pressure since January. $17.5 billion so of outflows. And literally on May the 3rd, which was last Friday or Saturday for us, for the last trading day of last week for American institutions, they had their first positive day of inflows. Now, there's a few different ways to interpret this. You know, a lot of people just look at it blindly and say this is so bullish because finally it's turning. I will add today they had positive inflows again. So 2 days in a row for Grayscale. So maybe that sell pressure has subsided and it's another reason to think that we can see more upside now.
The big players in the market.
Yes,
so.
And BlackRock was positive again. So
BlackRock's been positive since
every single day except last week they had their one and only negative inflow day.
Gotcha,
so,
okay.
That happened pretty much on the day. It's so funny. I'll actually show this in the... you know, I've been making jokes in the shit posting channels of Trading Academy that they'll buy back higher, the IBIT sellers, because if you go and look at just volume alone, the most amount of volume on the IBIT share for its ETF was on all-time high day, which insinuates to you that majority of traders traded the all-time high day, and then you go and look at the lowest volume day and it was on the day we wicked to the low. So they are the buy high, sell low kind of traders. So
it's always the retail market gets the bad rap, but really when you look at
it... it's funny because the way we view them is retail now because they've never experienced this volatility. Someone like me and you seeing Bitcoin go from 63,000 to 56,000 and then back to 63. Well, we haven't blinked, you know what I mean?
Yeah, exactly.
It's been another normal day for us. If they bought at 74,000 and they've seen price go from 64,000, 56,000 one day, they're like, it's going to 20,000. I need to sell my shares.
It's funny recently having conversations with family members and such, and you know, the first question, they know I'm a Bitcoin guy. How's Bitcoin going? You kind of say, oh yeah, it's been good. You know, we were up nearly at 70,000 and we nearly went down to 50. Oh shit, it's volatile. And like for me, it's like, yeah, it is, but you just expect it. Like when you've been in it for so long, that's just like, it's just noise.
Yeah, you're so immune to it.
But it is crazy, isn't it?
Yeah, it is crazy. And it's kind of what I try and really preach and teach, obviously, newer members of Trading Academy. But I actually often preach it a lot in the Chronicle. You've seen me say it many times. I say that the low time frame movements on price right now, regardless of how you look at it, is all noise because any high time frame chart you go to, none of them are bearish. So if you're able to kind of instill that mind frame, and I actually went over this in last week's podcast and in the Chronicle talking about how the last 6 of the 7 weeks have been red and how psychologically you feel like shit because you're like, it's just been so bearish, but price is at $63,000, which, as I spoke to Taylor about last week, historically post-halving, we've been well off the prior all-time high. We've been seeing a 50% retracement and a slow grind up, and maybe 90 days after the halving is when things kick in. The prior all-time high was 69,000 and we're at 63,000, you know, almost a month after the halving. So let's just say we're at all-time highs. So you kind of look at it, you know, holistically from a bit back and you get rid of the noise. I think it's overwhelmingly bullish what we're seeing right now. But yeah, anyways, that's also just, you know, kind of a good kind of positive thing for BTC's trajectory that maybe we won't have such great outflows from Grayscale now and that'll become buying pressure and demand as opposed to the constant selling pressure.
I think you made a good comment in whether it was a private chat or in the Discord the other day, and you were saying that yes, that these wipeouts maybe make us feel bad, but what they're wiping out is positive.
Yeah, exactly.
The building blocks of getting to these all-time highs.
Because if you go and look at funding rates, you go and look at open interest, and that's the thing about short-term noise and low time frame price action is majority of those that trade with me and have traded know that a lot of it is just liquidity movements and actually the perp market that is just constantly moving price so volatile because it's market makers pushing into areas of high liquidity to wipe out shorts or longs. Once again, if you go and look at what's happened with open interest over recent weeks and the funding rate is that majority of people and the way the majority of retail or those that try and move the cryptocurrency market is they do it through leverage trading. And everyone needs to, and we're victims of, everyone tries to chase a trade here and there on leverage as opposed to spot because they feel like, oh, I need to triple my position size or I need to catch up because I've missed out. And what ends up happening is 99% of people get wrecked is because all the people that long Bitcoin, let's just use Bitcoin for an example, from $56,000 3 months ago, watched it go all the way up to 75,000. They've gone, I've caught the long that's going to print me generational wealth up to 100,000. It's come all the way back down. It's wiped every single person that longed along that way.
Yep.
And we saw it on altcoins a few weeks ago where you just saw one vicious 5-minute wick down on all alts.
Yep.
That wiped out hundreds of millions and hundreds of thousands of traders too.
3-4 months of building, and then in just one or two, bang.
And I think the good point I made in the Chronicle last week as well is that it works both ways. And I spoke about how 6 of 7 weeks were red, and it only takes one weekly God candle to erase everything you thought about for 3 months.
Yeah.
And the funny thing is we essentially did have it, is because I was saying that at 63,000, saying if we even get a wick down to 56, 57,000, we could reverse that in a few days and you'll forget about it. And it's literally what's happened. Like last week it felt
and you
like...
posted that yesterday. You show like last week, the prices, like what was Fandom at 61 cents, now it's at 70.
I made the real big point in the Trading Academy. I said, and I said it on this podcast I said, take a screenshot of what prices are now. I think in the market update last week, and I was saying to Trading Academy members, FET is at $1.70, Sol is at $1.15, Phantom's at 60 cents, Bitcoin's at 58,000, ETH is at 2,800. You guys need to understand that you accumulate these prices in 2 months, you'll look back and go, I can't believe we had those prices.
Yeah, literally.
But right now, in the moment, you're saying it's so scary. I'm going to have to buy them lower.
Yeah, but 100%. It's actually a good thing to write down. When you're feeling the worst, write down, this is what I was thinking of the market. I
stole the idea from another trader that used it recently, and he showed the screenshot, and he said, I remember in August of last year or whenever it was, because the market did work really hard. I remember having a really distinct feeling about it as well. We were going through all these black swans, 2022, 2023. We've bought the lows in 2022, and it's like gotten to October and we've gone to 35,000. We've come all the way back, and it almost felt like, I spent like all this, time researching, trading, and like it's like, we're almost back to where I was. And then market just ran without you even, it just ran from 25K in late October, and by December we're at 48K, and you were like,
My biggest one was we were in Miami, we were in America, you, me, Cal. And, Bitcoin was dumping. I think it was at 17,500. Yeah. And I remember we were all in that room. I was like, we should buy now. Like, what's the worst that could happen? We're like, I know there's war in Ukraine happening. There's this happening. We're like, we'll just wait a bit longer. And it's like, what are we thinking? You know what I mean?
Yeah.
But I've learned from that now, exactly. You remember those.
And it was a really good point you made before about how you're constantly, that's the thing to everyone, is we're constantly learning. Recently, I put a lot of focus into leverage trading, and I recognize I need to make a shift actually back to spot, and to recognize that it was working so well for me in a bear market, but now that we're in a full bull market, I shouldn't be chasing with leverage, as we were talking about before, or focusing on short-term gains with leverage. It's stacking my spot, accumulating my spot, knowing that in 3 to 4 months that's going to be the safest, most effective way to make money. But all really good points. We're all constantly learning in this market. But
onto our man.
I will quickly just mention these two because we've got a bit to get through, but we might have to skip it a bit today. That's 18 minutes already, but we did mention CZ had his sentencing, I think, the day after we had the podcast last week, so we're speculating on what he got. He got 4, which is the funny part, the funny meme for all those that have read my news articles over the years. Ever since he'd been flashing the infamous 4, I pretty much made that my photo for everything, and he predicted the amount of months he'd get. So he's a
I love that meme. He whispers into the prosecutor's ear.
Yeah,
I want one more month.
Yeah, he does. Yeah. So he got 4 months. There's a news article there you can read more detail on. Our man number 2, Michael from MicroStrategy, has actually recently started his own Bitcoin-backed decentralized ID solution. So these have comprises of 3 systems: Orange Service, SDK, and applications. And essentially what it is to enable users to issue and manage decentralized identifiers, which is DID. So essentially these identification things that are, I still think, anonymous. It's like you go on the blockchain, you make your ID with the wallet. So the wallet is your ID. Think of it. It's not like your actual William Wright, blah, blah.
Yep.
And that's so you could set up mining store on Thingo, and it's and then you apply wallet and personal decentralized ID to every staff, and it might be that you pay your staff so it's all on the blockchain, it's all on open source Bitcoin, but it's still, decentralized.
I had an idea on this, and I know we're pressed with time, but I think it's interesting. I've always got an idea. But imagine, one that is fully verified, right? So your ID is on the Bitcoin blockchain, and it could be really good for developers. So developers that are building projects, and they've had successful projects worth hundreds of millions, and then they're starting a new project. They could connect their ID to that project to verify their doxed and all the rest of it, but also fund. So they could put, say, 5 mil, for them that's not that much, into it, and it's like an insurance policy that if anything happens, this 5 mil will come from my insurance ID to help, similar to what we happened with Mosaic, right? Yeah. If the developers had some fund there that if anything happens, it will pull from our personal,
Sure they do that through
there's insurance and things like that.
Multi-sig wallets where 3 people have to sign off. We do it in the bakery, me, Simon, and Duncan.
Yeah.
But I'm sure there's a lot of, I'm sure that's what he's doing. So
it could lead that way, but again, press for time. So
let's move on. We'll discuss this in private conversations. I'm just going to quickly run over BlockBuy, led by Jack Dorsey. Now, this is an interesting one. What they've decided is they're allocating 10% of any earnings they make on Bitcoin through, and then they're reinvesting it, back into monthly Bitcoin purchases. Now, reason why this is really cool and why I want to bring it up is we're seeing a new way of private and public businesses doing this. So obviously the most extreme example is MicroStrategy that literally sells off their shares and reinvests them back into Bitcoin. Here is yet another example of a company that is going to be getting their gross profits and just investing monthly into Bitcoin as their own DCA strategy, essentially to accumulate as much as they can. And the reason why I bring this up is that, how many more companies are we going to see this do? Another perfect company that has the perfect business structure is Tether. Tether, in every month, puts 5% of their gross profits into just Bitcoin purchases, and they just hold it on their balance sheet, and they're going to do it permanently forever. So once again, it's just another way of seeing heaps of companies just going to do this. Imagine in the future when there's thousands of companies that are just using their profits to reinvest back into Bitcoin.
It makes a lot of sense, doesn't it? It's similar to we talk about our clients using self-managed super fund to set up Bitcoin mining. It's it's your long-term side of your investment. It makes a lot of sense for companies which are long-term. Tesla's going to be around for a long time. We hope so anyway, to be investing into something that is a long-term investment.
Exactly. And I think for them, even as an investment, it's not even how they're viewing it. People like Michael Saylor and Jack Dorsey believe this is going to be the reserve currency for the world. Yeah. So their idea is literally
less of a joke now.
Yeah, it's less of a joke now. But to them, it's literally we need as much of this as we can get. And so how can we get as much of it? Okay, we need to be reinvesting everything we make, not everything. Portion of what we're making 10%. Back into it. But if someone like Jack Dorsey, he believes that Bitcoin will inevitably has to be the native currency of just the internet, not even of countries or whatever, but of at least of the internet. So to him, it's a no-brainer. He literally started Twitter. He's like, if I believe it's going to become the native currency of the internet, I need to have as much of it as I can.
Yeah, makes sense.
So I have the most purchasing power. Alrighty. One more, another week, another milestone for Bitcoin. It's hit 1 billion transactions. Wow. So we can almost do our little... So it's processed its billion transaction after 15 years in block 842241 on May the 5th. So it's 15 years and 4 months after launch. This is obviously huge. So well done to Bitcoin on the billion. I wonder when the trillionth will be. If it's taken 15 years for a billion, how can we forecast this 1,000? Maybe we won't be alive. Maybe we should move on from that one. But
quickly on that though, Bitcoin's been around for half of our age now.
Yeah, it has. More than half of our age. When you think about it like that, it makes them feel not that new tech now. Yeah. I think it's just always compared to every other technology and thing on earth, isn't it? But,
it's still interesting though. I was thinking when I read that, I was like 15 years. I'm not even 30 yet. Yeah. That's
it's weird when you kind of, even 4 to 5 years ago, when we're talking about crypto and you say, 10, it's only a decade old, but now it's like, it's almost 2 decades old. Just a quick few pieces on institutional investment into cryptocurrencies. MoonPay broadened their cryptocurrency choices by integrating PayPal, which is always awesome to see. PayPal is obviously a huge proponent of cryptocurrencies. We know they have their own applications that facilitate fiat to crypto transactions, or you can deposit through PayPal to buy certain select cryptocurrencies. So obviously this integration initially will target MoonPay's direct-to-consumer products, with plans to obviously widen adoption amongst partners and expansion to UK and EU markets, which is good. Additionally, Vodafone is exploring integration of cryptocurrency wallets through SIM cards, which is actually kind of cool to think about. So it kind of aligns with their Vodafone Ideas financial strategy. And really, yeah, it's just cool to see that a company as big as Vodafone, and I think the two cool things about these is MoonPay and Vodafone are both UK companies, which is arguably one of the stricter regions recently with crypto. So it's cool just to see them pursuing different partnerships like that.
Crypto and SIM cards gives me the heebie-jeebies.
Yeah, it does.
I don't know.
But, I think there's some things that give you the bejeebies in this industry that you just sometimes have to say to yourself, it's inevitable. Like, it's just going to happen. It makes
sense when you look at the stats there, 5.6 billion crypto wallets who exist right then. There's 8 billion smartphones. Yeah. It is a great way to get mass adoption. You tap into an area that everyone's using. But just with us OG crypto guys, and we're always looking at security, and it's all about being in control, not a third party.
Like you would never ever have any crypto stored in an Apple iPhone.
I love it in terms of the expansion and making this more mainstream, which has to happen. But it gives me the heebie-jeebies.
Yep, just one last one. For 2 months running now, funding has reached $1 billion consecutively into crypto from venture capital firms. So notably, BlackRock invested $47 million into Securitas, and Monad's $225 million was backed by Paradigm and Coinbase Ventures. I believe these are RWA platforms or to-be release platforms. We discussed RWAs and real-world assets and how we're looking for that as an incoming narrative of ours that we're looking to get into and believe that will be a strong performer over the next year or two. So it's still awesome to see that kind of despite the kind of huge pullback across March and April since we peaked all-time highs in early March, that the industry as a whole fundamentally in its technology is getting still that investment from venture capitalists and traditional finance firms. So that's good. Alrighty, let's conclude with some technical analysis of mining. So obviously, as I mentioned last week, we're at about $63,000. The main discussion of last week was that we were finishing off April bearishly, that we kind of knew the fundamentals there that were overhanging our heads. We mentioned the war fears. Tax payments is a huge thing at the end of April. For those that don't know, the stock market's crypto, no matter where you look, it's just run riot. So companies will be in hefty profits, individuals will be in hefty profits. They have hefty tax bills, which means they're unlikely to invest further as they're paying off their tax.
Plus have to sell off to pay tax.
Yeah, exactly. So exactly. And then we saw outflows of ETFs. I could name, the TGA. I can name a number of things as well as the quantitative tightening that was occurring. But eventually what it led to was one last final dip below our range low into the 57 to 59K liquidity zone, which I've shown fractals on and areas on throughout the Chronicles and mentioned on the podcast. So if you had been listening, hopefully you actioned. But dipping as low as 56.3K, spending about 24 hours in that liquidity zone before reclaiming the prior range lows and sending it back into the current range, and which we're at 64,000 or high 63,000s now. Which is good.
I think on Saturday we nearly got to 65.
So I think it was late yesterday. We almost got to 65,000. We had a CME gap, which I'll show in the written chronicle as well, which formed over the weekend. That institutions have now refilled today, so I expect that we would probably bounce from here and we get some bullish continuation, because to me liquidity is coming back. There's a number of reasons which I'll tell my Trading Academy members and provide for them in the fundamental analysis, but really we expected what happened. Trading Academy members were able to get some buys in last week, and we're actually looking to execute more buys now that we should expect bullish continuation. I'm just remaining a bit more patient than what we need to, because alts aren't running too hard right now. But really what I want to quickly mention was what we went over last week with the changes to the Trading Academy service. So now you probably heard me talk about the day trading course and day trading academy in the past and how our short-term leverage trades or spot trades happen there. We're now moving that across to the Trading Academy, where the Trading Academy not only will be long-term investment, where we buy in the bear market, hold for say 2 to 3 years and sell in the bull market, but we'll actually be actioning shorter-term trades now, where we'll be rotating in between projects, short-term longs, where we'll be compounding long positions in riskier plays and using leverage, a stop loss, and invalidation as opposed to spot trading, and then also using that leverage and margin to short the market. So, for instance, in recent times we were shorting the Pico tops of Bitcoin. There was a trade that I did, I think, from 73,000 down to 65,000. Then using those profits actually put back into our miners or back into our spot positions, knowing that the long term we're going to see prices rise, but on the low time frames we'll make the most of those bearish movements. Including on that, I'm going to go back to providing video analysis and live streams too. For members, that'll be on either a Monday or Wednesday night. I've currently polled members and we're in a real tug of war between the Monday and Wednesday night, so I'll have to potentially re-ask. And then obviously research reports. These will be breakdowns of maybe new protocols that come that I'm interested in, or even entire blockchains. So the first one that I'm looking to wrap my head around finally and produce for my Trading Academy members is Rune's protocol, which we spoke about, and how much that's bringing DeFi and a new world of really decentralized finance to Bitcoin, and Bitcoin as a protocol, which we've never really seen before, only very loosely and lightly through ordinals. So if anyone's interested in that and wants to get in on the new buys we're about to action or any of the new features in the Trading Academy, please reach out to me, Will or Taylor. I'd really like just to highlight that holistic approach as well. So many people right now, with all this chop that happens, beginners tend to sell off spot, right? And they go, I can't take this anymore. I was all the way up here, now I'm down here. And when you really come around to understanding the holistic approach and understanding that you can just short the market, or you can long off the bottom, or you can put money into miners if they're at a lower price. And you have that mentality of you're in the crypto market, you're not just visiting the crypto market. That's when everything makes so much more sense. So again, if you're only a miner and you're listening to this podcast, or you're only a trader and you're listening to this podcast, make sure that you reach out within the Discord, ask about the other services, and start getting your fingers in all areas of it. And if you are, we'll just quickly say, I don't think we would have too many listeners here that would be like this, but if you are one of those listeners that does struggle, like I've even have a best friend that he'll sell on every drop and buy every top because he's just really emotionally involved and he doesn't have someone just to tell him to relax. Even though I do, but I feel like when I was first starting out in crypto, years and years ago, we were all like that, right? We're not used to the volatility we spoke of before. You'll get a really red day and you'll think that we're heading lower because you don't understand support, you don't understand resistance, you don't understand volatility. You sell, and what do you know? Before 3 days later, we're much higher, and you're buying back in higher, and you're worse off than what you were. And I find a really good part of our services and what I provide to my clients is that clarity and that kind of support that they need. That I know a lot of them, even the ones that have been with me for a while, still like this, but it's probably refreshing that they get a message on a day like last Friday where we're dipping is do not panic, do not sell. I'm looking to buy here.
Look at the opportunities.
Look at the opportunities. I gave that very clear explanation of how much Sol, Phantom, FET, Prime were down from their all-time highs.
With
how much they were down in the last 2 months, which was between 40 and 60% for a lot of these assets, and telling my traders or those that hadn't even got involved, like 2 months ago, you were asking for this diff. Like everyone in this market always says, I'm not buying because I'm waiting for when the dip comes, almost no one buys, I guarantee it. So having that support there, that encouragement, that conviction and that confidence to buy and enter the market, I find is a really good part of the service and what I wish I had when I first started out. So if that's something you're looking for as well, don't overlook that. Quickly to conclude the mining update, Taylor, unfortunately, our beautiful, handsome resident miner expert is not here, but he has detailed to me that the BTC has seen a drop back in hash rate, which was expected. The average now sits at 614 EH, but the live rate is as low as we've seen since pretty much at 518. So I guess like the pricing, which we often talk about, how pricing, difficulty and hash rate are related, this is the drop that most miners were seemingly waiting for. So the difficulty is set to drop by 5% 2 days out from an adjustment, which is some welcome relief. Obviously the block fees are still varying due to runes and ordinals and whatnot. So a brief run up to 0.8 Bitcoin per block, which was over the weekend, but this is now dropped back to 0.3, 0.4. Around other networks, Doge and LTC has seen significant drops in difficulty too, ranging from 10 to 18% drops in the past 7 days. Doge is jumping in price along with other meme coins, which gives increased profitability. Casper has remained consistent with a 4% jump in difficulty. CKB was the big mover, which is one of the more random coins. In price action. I know we've got a few clients at mine, but I just can't keep up with it. Every time it pumps Taylor asked me what's mate, I don't know. I think it's just a few white whales playing a few funny games with miners and
we've got no idea.
lack of liquidity. But Dash is also seeing that jump in 20% difficulty due to more D9s coming online. So that's to conclude mining and price and technicals and fundamentals. But I'm looking forward to a really good week, I think, both positivity on all fronts. I think fundamentally right now we're due for some better news, and I think we're kind of in that stage where even the bad news is good news, to be honest. And I think price action should be quite healthy this week following a couple of really bearish weeks. And I think we should pick up and hopefully see alts kind of make some ground after that huge drop. So got anything else to add?
No, good podcast. Lot going on, but I agree. Hopefully, in the next week, I think we're past the scaries.
Yeah,
I think we've got a good base here.
Yeah.
Potentially we see a little bit lower, but overall, looking forward to get that post-halving effect.
Yeah.
Whether it be in a month or whenever it is, but
for sure,
really taking off again.
Yeah. If anyone wants a further detailed recap, obviously, of our philosophy at Mining Store and Imperial Wealth, or our services, or breakdown of any of them individually, once again, just get in contact with me, Will or Taylor, and we'll be happy to do that for you guys. But until then, we shall see you all next week. Thank you very much.
Take care.